Bitcoin recovering some of its earlier losses, hovering around $64,000, just shy of that this morning after logging its worst single-day drop since the FTX collapse, according to Yahoo Finance data. Now, the cryptocurrency falling from all-time highs it just hit last week. Joining us now, we've got Owen Lau, who is the Oppenheimer Executive Director and Senior Analyst. Owen, for this dip, should investors be buying in or should they be a little bit wary of what's taking place?
Yeah, good morning. Thank you for having me. So I think the reasons for this correction are a couple of things, right? Number one, Bitcoin was up 150% in 2023. It's up 50% year to date. And then if you look at the recent strength in this in Bitcoin, I think a big part of that is tied to the recent strength in the net inflows into the net spot Bitcoin ETF. And we started to see some net outflows from this product. And finally, and what you just talked about was the inflation data was harder than expected. And we are actually looking to see whether the Fed would cut 3 times this year. So what I would say is maybe investors can be a little bit more patient and wait for a little bit for this correction.
When we talk about the downside risk here, Owen, how big of a drop are you expecting? We're right above 63,000 today. Could we drop below 60,000?
Yeah, it is possible, but I think this is data dependent. So what we just started to see was the bigger outflows from this product. I think yesterday we saw $600 million outflow from all these products, mainly driven by Grayscale. And then the Fed decision today is pretty important as well. If the Fed decided to, let's just cut 2 rates, I think there will be further room to drop for Bitcoin. So I think right now we're just like data dependent, and it's possible that it can dip further.
You know, it's really interesting as we think about the number of ETFs that have really boomed the inflow into crypto in general here. Now, when it comes to where we might see rotation or profit taking along the way, what type of shocks should holders of Bitcoin or crypto more broadly be ready for or prepared for?
I think if you look at the history of Bitcoin volatility, it has been one of the most volatile assets. So I think for new investors coming into this space, if they don't know about the history of Bitcoin, just go back and check about the history. Expect volatility in investing in this asset class. So this is a high beta technology company. If you want to use the equities as an analogy, some people use that as a digital gold. But in any way, if you look at the history, Bitcoin has been very volatile. So expect volatility going forward.
Oh, and going back to what you were saying earlier, just in regards to the sentiment shift that we have seen, do you think it's warranted at this point, given the fact that there is many reasons, like you have laid out in recent research notes, to be optimistic about the price in the long term?
Yeah, I think over the long term, we are still optimistic because of a couple of reasons. Number one, we still see further adoption for spot Bitcoin ETF. We are just still in the early innings. And remember, Bitcoin is a global phenomenon. So I think BlackRock listed in US, and they are just going to list, or they just listed IBIT, their spot Bitcoin ETF in Brazil. So you can tell many of these asset managers can list this product overseas. And this product is homogeneous. Like you can also buy Bitcoin in Asia, in Singapore, and also in Europe. They're the same. And the second point is right now, I think the headwinds we are seeing, part of that probably came from the Fed. So if the Fed decided to, let's cut more rate next year, we still see the case and catalyst that can support the Bitcoin price longer term. So I would say longer term, we are still optimistic about the Bitcoin price action.
Oh, and just lastly, while we have you, I was looking at one of the blog posts from Coinbase CEO Brian Armstrong posted yesterday, where he talks about some of the features moving forward, popular examples: digitizing the dollar, fast, cheap global payments, business model for creatives, decentralized social media, under the umbrella of this title, What is Crypto Good For Anyway? Who are, and of course, Coinbase has a lot to gain by this, but at the end of the day, who are some of the biggest crypto-touching equity market plays that you've got your eye on and that could continue to see a sustained inflow or sustained positive reaction as a result of a lot of the new highs we've seen this year in crypto?
Yeah, thank you for pointing out this point. I think there's a misunderstanding about digital assets have no use cases, and Brian was so right that point out some of the actual use cases in this space. Right now, the largest one obviously is Coinbase, and there are some private companies that I don't want to comment at this point that could potentially disrupt the whole payment space and remittance space and for longer term. So I do think tokenization is one of the use cases. Remittance and global money transfer, it's another big use case for digital assets. So I would say at current landscape, I'm still pretty positive on Coinbase that can capitalize this opportunity. But longer term, you'll see more private companies going into public market, and we can talk more about that.
Oh, and you got to give us one. Give us one private market company that you've got your eye on, that you can't wait to make a public debut.
I'll tell you in 12 months.
Hey there, investors. Did you catch that? Bitcoin took a massive hit, plunging from its recent all-time highs. But don't worry, my friends. This might just be the opportunity you've been waiting for. Welcome back to InvestMinder, where we decode the mysteries of the financial world. First off, a massive thank you for tuning in. Your support means the world to us, and if you haven't already, make sure to subscribe and hit that bell icon to stay updated on our latest investing videos. Now, before we dive deeper, let me remind you that we're not professional financial advisors, and this content is purely for educational and entertainment purposes. Always do your own research and consult with experts before making any investment decisions. With that out of the way, let's dive into the juicy details of Bitcoin's recent tumble. As the transcript we just watched revealed, experts are divided on whether this dip is a cause for concern or a golden opportunity to buy the dip. Some analysts believe it's merely a temporary correction after Bitcoin's meteoric rise, while others warn of potential further drops. But here's the real question: what does this mean for you, the savvy investor? Should you be rushing to load up on Bitcoin while it's on sale, or should you exercise caution and wait for clearer signals? Buckle up, folks, because we're about to take a deep dive into the world of cryptocurrency and uncover the truth behind this volatile market. To truly understand the current state of Bitcoin and whether this dip is a buying opportunity or a warning sign, we need to explore the factors driving this volatility. One of the key reasons cited for the recent correction is the surge in Bitcoin's price earlier this year, with the cryptocurrency skyrocketing by a staggering 150%. While such astronomical gains are undoubtedly exciting for investors, they often prompt profit-taking and a subsequent cooling-off period. After all, even the most bullish traders are tempted to cash in on their gains when the market seems overheated. Another significant factor influencing Bitcoin's price movements is the influx and outflow of funds from Bitcoin exchange-traded funds, ETFs. As the analyst mentioned, a substantial $600 million outflow from these products, primarily driven by the industry giant Grayscale, contributed to the recent sell-off. ETFs have been a game-changer for the cryptocurrency market, providing institutional investors with a regulated and convenient avenue to gain exposure to digital assets. However, this double-edged sword means that large outflows can exacerbate downward price pressure, as we've witnessed. Furthermore, the upcoming Federal Reserve's decision on interest rates is looming large over the entire financial landscape, including cryptocurrencies. If the Fed opts for a more aggressive approach, implementing 3 rate hikes this year instead of the anticipated 2, it could potentially trigger further sell-offs across risk-on assets like Bitcoin. On the flip side, a more dovish stance from the central bank could reignite the rally in digital currencies, as investors seek higher-yielding and speculative investments in a low-interest rate environment. Amidst this volatility, it's crucial to remember that Bitcoin's price has historically been subject to wild swings. The cryptocurrency's meteoric rise has been punctuated by sudden crashes, testing the nerves of even the most seasoned investors. Yet, despite these turbulent episodes, Bitcoin has consistently rebounded, suggesting that the underlying technology and growing adoption continue to drive long-term demand. This leads us to the crux of the matter. Should you buy the dip or exercise caution? The answer, as with most investment decisions, is nuanced and depends on your risk tolerance, investment horizon, and overall portfolio strategy. For those with a long-term perspective and a higher risk appetite, the current dip could indeed present an attractive entry point. Bitcoin's proponents continue to tout its potential as a decentralized, borderless currency and a hedge against inflation, factors that could fuel its adoption in the years to come. However, it's essential to approach Bitcoin with a healthy dose of caution and pragmatism. This asset class is still in its infancy, and its regulatory landscape remains a work in progress. Governments worldwide are grappling with how to monitor and control the use of cryptocurrencies, and any adverse regulations could significantly impact their adoption and market value. Moreover, the environmental concerns surrounding Bitcoin's energy-intensive mining process have drawn scrutiny from environmentalists and policymakers alike. While efforts are underway to transition to more sustainable mining practices, any substantial pushback or crackdowns in this area could dampen investor sentiment. Another factor to consider is the inherent volatility of the cryptocurrency market. Bitcoin's price swings can be extreme, and investors must be prepared for substantial fluctuations in their portfolio value. This level of volatility can be stomach-churning for even the most experienced traders, let alone novice investors. It's also worth noting that while Bitcoin may be the most well-known cryptocurrency, it is not the only player in the game. The rise of altcoins such as Ethereum, Litecoin, and Ripple has introduced competition and diversification within the digital asset space. As these alternative cryptocurrencies gain traction and mainstream adoption, they could potentially erode Bitcoin's market share and dominance. Amidst this landscape of opportunities and risks, it's crucial to approach Bitcoin and other cryptocurrencies with a well-diversified portfolio strategy. While a small allocation to digital assets can potentially enhance returns and provide exposure to an emerging asset class, it's generally advisable not to go all in on any single investment. Diversification across various asset classes, sectors, and geographies remains a cornerstone of prudent investing, even in the age of cryptocurrencies. By spreading your investments across different vehicles, you can mitigate the risks associated with any single asset and potentially achieve a more balanced and resilient portfolio. For those considering dipping their toes into the cryptocurrency waters, it's essential to conduct thorough research and due diligence. Understand the underlying technology, the potential use cases, and the regulatory landscape in various jurisdictions. Seek guidance from financial advisors with expertise in this domain, and never invest more than you can afford to lose. Additionally, it's crucial to separate the hype and speculation surrounding cryptocurrencies from the real-world applications and adoption. While the promise of decentralized finance and borderless transactions is tantalizing, it's essential to evaluate the practical implementation and scalability of these technologies. As we delve deeper into the world of cryptocurrencies, it's essential to acknowledge the potential disruptive force that this technology represents. Bitcoin, and by extension the broader cryptocurrency ecosystem, challenges the very foundations of traditional finance and monetary systems. At its core, Bitcoin introduces a decentralized peer-to-peer network for facilitating transactions without the need for intermediaries, such as banks or governments. This paradigm shift has the potential to democratize finance, reduce transaction costs, and provide greater financial inclusion for unbanked populations globally. However, this disruption also raises concerns for established financial institutions and regulatory bodies. The anonymity and lack of central control inherent in cryptocurrencies pose challenges in terms of monitoring and preventing illicit activities such as money laundering, tax evasion, and financing of illegal operations. Governments worldwide are grappling with how to strike a balance between fostering innovation and maintaining oversight and control over financial systems. As a result, the regulatory landscape surrounding cryptocurrencies remains fluid and subject to constant evolution. Despite these challenges, the growing adoption of cryptocurrencies by mainstream entities is undeniable. Major corporations such as Tesla and MicroStrategy have already invested substantial sums in Bitcoin, signaling their confidence in its long-term potential. Moreover, the emergence of cryptocurrency-focused investment products, such as ETFs and futures contracts, has opened the door for institutional investors to gain exposure to this asset class. As more institutional money flows into the cryptocurrency market, it could potentially drive greater stability and liquidity, reducing the extreme volatility that has characterized this space thus far. The underlying blockchain technology that powers cryptocurrencies has applications that extend far beyond the realm of finance. Industries as diverse as supply chain management, healthcare, and real estate are exploring the use of blockchain to enhance transparency, security, and efficiency in their respective domains. As these real-world use cases continue to proliferate and gain traction, it could further solidify the long-term viability and adoption of cryptocurrencies, transcending their initial role as speculative investment vehicles. However, it's important to recognize that not all cryptocurrencies are created equal. While Bitcoin may be the most prominent and valuable digital asset, the cryptocurrency landscape is vast and highly competitive. Thousands of altcoins exist, each with its own unique value proposition, underlying technology, and potential applications. In this crowded space, separating the wheat from the chaff becomes paramount. Investors must conduct rigorous due diligence and carefully evaluate the fundamentals, roadmaps, and real-world utility of each cryptocurrency before committing their capital. As we navigate the ever-evolving cryptocurrency landscape, it's essential to maintain a balanced perspective and a long-term outlook. While the allure of quick gains and life-changing returns can be intoxicating, it's crucial to approach this asset class with a level head and a healthy dose of skepticism. One of the key advantages of cryptocurrencies lies in their potential to democratize finance and provide greater accessibility to financial services. However, it's important to recognize that this democratization also comes with inherent risks and vulnerabilities. The responsibility for conducting thorough due diligence and safeguarding one's investments falls squarely on the shoulders of individual investors. Moreover, the anonymity and pseudonymity that cryptocurrencies offer, while touted as a feature by proponents, can also be exploited for nefarious purposes. Instances of cryptocurrency-related scams, hacks, and illicit activities have already tarnished the reputation of this nascent industry, underscoring the need for robust security measures and regulatory oversight. As the cryptocurrency market continues to evolve, it's likely that we will see increased scrutiny and regulation from governments and financial authorities worldwide. While some may view this as a threat to the decentralized ethos of cryptocurrencies, others argue that appropriate regulation is necessary to foster greater mainstream adoption and protect investors. Finding the right balance between innovation and oversight will be a delicate dance, and the outcome will have far-reaching implications for the future of cryptocurrencies and the broader financial ecosystem. Amidst this rapidly changing landscape, it's essential for investors to stay informed and adapt to new developments. The cryptocurrency world is rife with misinformation, speculation, and hype, making it crucial to rely on credible sources and objective analysis. Engaging with reputable publications, attending industry events, and seeking guidance from experienced professionals can help investors navigate the complexities of this space and make informed decisions. Additionally, it's important to recognize that cryptocurrencies are not a get-rich-quick scheme, but rather a long-term investment opportunity that requires patience, discipline, and a willingness to weather volatility. Diversification across various cryptocurrencies as well as traditional asset classes remains a prudent strategy for managing risk and building a resilient investment portfolio. As we approach the end of our exploration into the world of cryptocurrencies, it's important to remember that this is a journey, not a destination. The crypto landscape is constantly evolving, presenting new opportunities and challenges along the way. While the recent dip in Bitcoin's price may have caused some investors to panic, it's essential to maintain a level-headed approach and focus on the long-term potential of this revolutionary technology. Cryptocurrencies represent a paradigm shift in the way we perceive and interact with financial systems. They challenge traditional notions of centralized control and offer the promise of greater accessibility, transparency, and financial inclusion. However, as with any emerging technology, the path to mainstream adoption is fraught with obstacles and uncertainties. Regulatory hurdles, environmental concerns, and the ever-present threat of market volatility will continue to shape the trajectory of cryptocurrencies. Yet, it is in these moments of uncertainty that fortunes are made. By staying informed, conducting thorough research, and maintaining a diversified investment strategy, you can position yourself to capitalize on the opportunities that arise in this exciting and rapidly evolving space. Remember, at InvestMinder, our mission is to empower you with the knowledge and insights to navigate the complex world of investing. We'll continue to bring you the latest developments and expert analysis so you can make informed decisions and achieve your financial goals. So stay tuned, stay curious, and most importantly, stay committed to your investment journey. The future of finance is being written before our very eyes, and you have the power to be a part of this historic transformation. Until next time, this is InvestMinder signing off and wishing you the very best in your investment endeavors.
Thanks again for watching and good luck with your dividend empire aspirations. Hope you found today's analysis helpful as you look for profitable new stock opportunities. This was InvestMinder. Remember, knowledge equals profit in the stock market. Thanks so much for watching, and please hit that thumbs up button if you got value from this video. Make sure you click to subscribe as well to get our next videos when we reveal the best new insider stock purchases. Invest wisely, trade carefully, and we'll see you next time. Disclaimer: InvestMinder is an independent stock market commentary channel for entertainment and basic informational purposes only. We are not licensed financial professionals and do not provide personalized investing or financial advice. P.S. If you stayed watching until here, you are awesome. Thank you for enabling me to keep making these videos with all the likes and subscribes. Have a great day, and we love you all.